Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Monday, October the 7th, 2024. It was a good day. Now, a lot of chop, a lot of questionable, gee, should we go this direction, that direction, but still decent moves. But they were quick, and sometimes that was it. That's all you got. And then at approximately 2 o'clock, we got our first taste of the markets triggering volatility triggers. And what I was noticing where it was happening was in the spiders initially, and then it kind of just went over. But it happened in the spiders. And there were two levels, and the first one was 572, the second one was 570. And it's like when they broke 572, we got a decent sell, and those were the early ones. And then we, after when it broke again and then broke the 470, then, or 570, whatever it was. Actually, in the ES, it was 5765. That took a while. I had to go over and look at it. So when it broke the 5765, and then when it came down, and it actually broke a large gamma level, and it looked like it, but and then this was the next thing. So this is what happened in my mind. I saw that 5750, it broke and it started to sink a little bit harder. That was phase two of that pushing down. But again, it was what in my mind, I'm looking at that saying, okay, the broke the volatility trigger. What does it suggest? It suggests that the risk off trade just kicked in, and maybe it was a very early trader decided that was enough. They were going in, they made the switch, or they got out of a trade. Because what you also saw at the same time was volatility itself via the VIX future jumped. And from being sort of up to being nicely up. And so again, that's reversing that trade. You're buying the vol. You're not selling it anymore. You're buying it. And you're getting out of the vol in the underlying. Anyway, those two broke. Finding it of what interest is the fact that when they came back and it closed right at 5750. So let me get into what I'm doing here. And what also I just want to touch on is like what I'm presenting is first of all, a large picture, tailoring it all the way down to a daily, down to an intraday picture as to the development of the two possibilities. So as it came into my mind today, basically the market does still remain in, and I put quotes on this, where am I? I don't know territory. Because it's one trader turning to the other trader, where are we? And the other trader going, I don't know. So what happens when that occurs, and I'm coming right out of this, I can show you real quickly. I'm going to go back to that. When it occurs, your focus turns right into this. And that's your focus. And then now you're intraday. Now you're coming up into the today, this morning. Like the opening gave you your first clue. It's like, this is not going to happen, because they raced it up and they got to that high. And that was the first time they came down and they started to look like they were going to break 5750. But it stopped. And it took two more tries to actually get below it. And then to do this. And you could see when they quickly retook it. So, but it was just the first trade. And so what it ends up when you're saying, where are we? I don't know. That type of thing is like, because the market, that could be it. It's just a taste. And now we pull up. So that's when I go back out. So I'm going to go back out and start talking Elliott to this whole scenario. Again, if I start back on that 4-hour chart, I put back into place. This is the way I've left it over the weekend. The weekly update was that the minor 4 was done at the August lows. And that's what we've done thus far is minute wave 1 of minor wave 5. Minute wave 2 of minor wave 5, and now we're inside of a minor third wave going up, and we completed minuet wave 1 of minute wave 3 of minor wave 5. So it does suggest that if we're engaged here, we are in an upside move, and right now, after completing a minuet wave 1, what comes next is a minuet wave 2. It'll be an ABC, and it'll be in the down direction. It'll be correcting. Drop down to the hourly chart now and open this up a little bit to widen the picture. This is, again, I'm using candles. Instead of what I also like, no, that's not that, it's here. The bar. But right now I need to see the body of the candle because that helps on labeling. The bar does as well, but that's usually because I've traded it via a candlestick chart when I come over and I look, but I want to make sure that I'm showing you the same thing. Okay, so here we are. There's wave one. We're in a minuet wave two consisting of an ABC. There's A, there's B. And B was on Friday's, actually yesterday's opening high. So yesterday's Globex opening high. That was it. And then we started to come down in. And so if anything, that put in the, where is my B? I put in the B. And I'm going to stick it in there right there. I thought it was already there. Which puts us in a C wave going down. All C waves must be fives. So let me just finish this up. Thank you for your patience. All right, so there's the B. And now we're working a 5. And if anything, 1, 2, almost 3, almost 3. So that's the 1 hour chart. Let's go down to the 15. Now, trading this, folks, trading this, you can still be in, where are we? I don't know, land, and trade and have great trades and make decent money. So again, what my focus turns to is I'm following the flows. I'm following the options flows and where the capital is moving and what's trading. And so if they're buying calls or they selling calls, and how does that affect my levels where things would really switch, pick up some speed, or change tone? So if we're still just in a correction, we still can get a serious downside move because I am 1, 2. If this is a 3, if it's done, and this is a 4, but I think more likely this is 2. 1, 2, 3, 4, and we got one more to complete a 3. We get another 4 and another 5. So quick trip back out. So we're looking for 5 wave C. I'm on a 15-minute chart. Looks pretty big, doesn't it? And it's very. And if you just trade focused with a good mindset and you know what you're doing in terms of, you know what your trigger is, you know where your entry. So your trigger is your entry. You know what your goal is on the trade. So whatever triggered it, you have to look towards that next level, or you know what your next level is going to be. Could be with the moving average, could be to support and resistance. It could be to many different things that you use and are comfortable with. So that's the first thing. The first thing is what is the trigger? The second thing is what's your goal on the trade? The third and most important is your stop, and make it a trailing stop. So when you get these great moves, it trails it with you. And then when you become confident enough in what you're doing inside the move, then you be your own stop, where you're going to take your position off. But the trading opportunities were there. This was chop, a lot of it. So overnight, but during our day, our regular session began choppy. These were good. Then you sit out the chop, and then it gets good again. So yes, you had to wait. All right. So back to the Elliott. So if I'm thinking this, and we'll go up one more, that's the B wave. So what do we got? 1, 2, 3, 4, 5. And that is wave 1, and then an ABC for wave 2, and then a 1, 2, 3, I believe. This could have finished it all, but I'm going to give it the benefit of the doubt just because of the way it traded down here. If they were done, then they would have pushed it up higher. As it is, they got it to 57.50, which is a level. So, and there are tools that you can get now that have become available that would kind of hone in. I mean, if you're really an intense trader, you're just an intense all-day day trader, and you're coming into the close, you're going to get a good idea of where they may pin it. So it doesn't become a matter of like who's bullish, who's bearish. It's a matter of what's trading and where they want to pin it. So who's got the long calls, or who's short the call, or who's long or short the put. And it makes a big deal. 5-10 cents makes a big deal to where that option may finish out, and then what needs to change hands. So it's interesting. And they went back to a safety zone, which is 57.50. And it was in the S&P, and now it's transferred over and becoming like a safety zone, sort of, just because of the number. But I believe if they break that again, then we're just once again falling below a large gamma level. So the first time we did it, we got down to 37, and then it bounced back. So that secondary break below the 57.50 level, I think what happened there is everybody looked over to see, well, what would the next level be, and realized that it's way down there at 55.50. And so you start to think, okay, we're not going to go that far because I have additional support. And then I have to really factor in, it's like, yeah, could the market drop another 33 points? Well, yeah, it could have, and that would have brought me down to where I want wave C to come. And so I could track it down to there, but it didn't. But at the same time, it didn't really, it did threes. Right, 3 up, 3, 8, well, that's good, 3 up to here. Now it's just kind of waddling around. We'll see what it wants to do in 20 minutes. But again, going back out at least to the hourly chart, what I kind of would be looking for from here is 1, 2, 3, 4, we get a 5. And whether that's inside, this is 1, 2, 3, 4 of 3, and we get a 5 of 3, and then an up and then a down, that's also possible. But bottom line is, I really think I'm going to be looking for the S&P, the ES, to get us down to like 57.03 into this territory, breaking below that 57.24 level, which is from the 2nd of October. Then, because that's A, so I expect C to come below A. C would equal A at 57.03, and that's the most common. And we got this nice zigzag, and it all fits. Or actually, it turns in more almost a flat, but at least it fits. And that then would suggest, now here's the kicker, if we go and do that tomorrow, again, it's going to depend on what got filled in today. And it all is according to how the options traded, the options flow. And I don't have those numbers yet. So, and in any case, that would be something I'm going to be putting into these reports. But I don't want to get into too much greater detail just yet on that project. Anyway, moving averages. So I'm looking for a little bit more downside than the possibility that it could stop. Now, if it's a C wave and we put a 2 and it turns into a third wave, this is what I would expect. That the market stops and we get a lot of intense buying. It just turns. And remember, these are algorithms that are kicked into gear, kicked into action. It may occur if the market were to go back above, in this case, 57.65. If that indeed is the same place where the volatility trigger will come in, I don't know yet, but that's where it was today. It likely will shift because trading did. So we'll be looking for that. If it's above the market and we go up and take it out, it starts to signal once again, we're pushing back into a safety zone, go ahead, risk on. And these are algorithms that are just doing it. So folks, this is what's going on. And you just continue to watch the flows, and that's what I'm trying to do here. And I'm going to try to translate it and combine it with Elliott, and so I can put fibs around it and give you an idea of where it's going to happen. So right now, yep, I'm leaning a little bit towards we're going to finish this. I'm going to put a wave 2, and then we're going to go up. So if you had to say, what am I leaning into? I'm leaning into that the upside will continue. And that really pushes us to give a test of 5,800 again towards 5,900, and then towards almost 6,000. And I can get that. These numbers tell me that. So right now, I'll be filling in the blanks. Once I do get that wave 2 in, then I'm going to run from here to here and be looking for the initial wave 3. And then I can refine that as we move along. One more thing, going down to that hourly chart. I did give you the downside. But outside of that, if it really kicks in, because this is the big thing, oh, it didn't stop there. It kept going. In fact, it broke 57. Here's how it can happen. Right now, there is the minuet wave 1. Here are the fibs for minuet wave 2. There they are here. So we're counting the C wave, which is to here, but it brings us closer to, for wave 2, to the 3A2. Could it go down to there? Sure. It's only $20 more. And it's still within the realm of reality, and it's just overflow. Doesn't mean that I won't get the same reaction, but it might start from here. Or here's the other one. I got 1.618 and 50% grouped together at 5640-ish. That gives me double. Here it's a little spaced out. Here they're grouped together. So what if this really kind of just swings and comes down? I'm going to tell you that that's an area I believe the market will pause, or it could complete. Now you can be prepared for this should it come down and it breaks here and it just looks like it's going to keep going. And if it breaks here and looks like it's going to keep going, it's because that was in mind all along. And it wouldn't surprise me to, via other vehicles, that you can go find out that there are order blocks there. In other words, there are parked orders to buy, parked orders down in that area. It becomes a magnet for an algorithm that's on a program or on a mission. So we've seen it many times. All right, moving averages. I'm going to take it out to the daily really quick, and then we get over to the NASDAQ. Pretty much, sitting right, got down to the 20. The daily 20 got right down to it. Held it, gave it another little push. Whoo, we can take it higher. So, because it was saved. Doesn't mean it won't come back and take it one more time, because I think it might. But that's that. All right, over in the NASDAQ. NASDAQ was good today, I will say. Now, again, I'm starting on the daily because we're looking at the moving averages. And let me just open this up. Pretty much look at that, flat, flat, flat. They're flat, but it came down and rested on the 20 here as well. So both the S&P and the NASDAQ came down and rested right on the 20 and then closed above it. So it got back up off that danger and back it up to, we can sit here, we can rest here, and we'll see what they want to do in 15 minutes. Now, same deal. I'm going to go, you can see that I've got this, the 4 back in place over here. There's minute wave 1 of minor wave 5, minute wave 2 of minor wave 5, and then wave 3 subdivides, minuet wave 1 of minute wave 3 of that minor wave 5. So we got more to go. Now, within it, we have an ABC to do. So now I'm going to fill in my blanks, and you can follow me just so I can show you how I'm going to put in my fibs. First, we're going to put in just some straight retracements. So I'm going to edit this. I take that out. I could leave that one in. And that one, and then the rest of them come off, and they're going to be in this color. No, this color. And say yes. Okay, so here are what's left, and I didn't do the other two. My apologies. Been not necessarily the longest of days, but I'm just the wrong color. Jeez Louise, sorry. Can you tell them talk too much? All right, here we are. This is for minuet wave 2. Here's the A, here's the B. We got down, but now, so our next support, we need to get below 19,808. We have 19,785 is 0.382. We're getting ready. If we start to break below the daily 20, and I'm going to bring it back down to the hourly. If we break below that daily 20, then we're looking, and that daily 20 was right here. Then we're going to start, I think, to fall because it rested right on it. That low was right towards that level. So 19,946, we start heading lower. Here we are, same deal. 1, 2, coming off into 3. I would say 1, 2, 3, 4. Or I'd have to go look. Hold on. One quick thing because I want to see the bar. That's where it opened. That's where it closed. So from here down. Because I have to go 1, 2, 3. And then I didn't get much. I didn't get much above it. So that's where it opened, then it dropped, then it went up, and then that's where it closed. So interesting to say it would have to be 1, 2, 3 or 1, 2, 3, 4, 5. But that's just wave 3, and this whole thing is a 4. And we're still going to come down in a 5, but we could get a little bit higher if it needed. So I do think that's like we're still looking to come lower, and you can start throwing up your fibs here as well, because here that's the B, and now we're coming down in the C, and actually I might move it over. That's a slight new high as well. So both the S&P and here. So I can put it over here, and let's put this as a 1, 2, possible start of 3. And then we still got more to go. So the NASDAQ, I think, gets hit a little bit more. In fact, I will go ahead and do that. Put this over here, put this over here. And so we're looking for this C wave to start off at this level. And then we're just going to bring it down. Let me take it down to the 15-minute, and we're going to look deeper inside there. So again, ABCX, ABC for wave B. And again, taking it from the hourly charts. So wave B, there was wave A. So the whole wave B is over. Now we're down into that C wave. And they were looking for 5 waves from here. And we can say almost that was the first. Here was the second. And now we're coming off in the third. And that is wave 1. And it's a quick diagonal. And they're hard. That's the choppy from this morning. They're hard to trade, real hard. But you can see it. And once we got up to the 2 o'clock marker, boom, taste, boom. This is on a 15-minute chart. It was 45 minutes, pretty much nonstop, nice sells, and very profitable. So your whole day could have been made right there. I was able to do some from the opening into this rise, and then also did a little bit on the way back down. But this was pretty choppy. So if anything, okay, 1, 2, 1, 2, 3, 4. I'm looking for one more down, and I could put some markers on this thing if I go like this, and then over to if 4 doesn't go up anymore, and I get a 5th wave down, right? Within 3. 100% is 19,942. Okay. We close at 17. That's a nice drop. 1.618 is 19,885. Also possible. What I'm not going to be looking for it to come is like pretty far down. So if we're looking at just the whole minuet wave 2, there's 236. Okay, been through it. Next in line, 382. And we got a lot of line up there. That's for the minuet. And this would be actually still tied to this third. So I wouldn't use it. This one possible. And then you have another 4. But if this is in truth, 1, 2, 3, and this is the 4, maybe. Let me take that off and open that up a little bit. See what I'm talking about? We're coming down 1, 2, 3, 4, 5. Is that the 3? 5 can't be very long then, so that's why, right? Because even in a C wave, wave 3 can't be the shortest wave out of 1, 3, and 5. So you can always do quick calculations there to see. Now you're looking there to there, you do your matchup. Eyeballing it, thinking that it was longer in time, but that's what you need to figure out. So I'm going to say it still needs a new low. And so what was finishing was just that we have 1, 2, 1 of C, 2 of C, 1 of 3 of C, 2 of 3 of C, strange but likely true, or 1, 2, yeah. And then the 3 comes down to here, 4 and the 5. So you could have to put a 3 all there, but they cannot be the shortest. And so if this is long and this is shorter than that, then the 5th wave cannot. So that'll help you figure out if that's going to be the case. So you can put in your markers. Sorry that I'm not doing it, because I'll probably wait and do it later once the market opens. Thought I was a little bit more prepared with my charts because I didn't want to be too late coming in today. So again, I can do quicks this way to get where wave 3 might come in. And it does. 982 is broken, so that 855 comes up again. So yeah, we can come all the way down, and then for sure wave 3 will be the longest wave. For sure. And here's where, so it already has exceeded. This is your test, right? Wave 1, wave 2, wave 3, 100%. There's your marker, 982. It came down further. So wave 3 right now is the longest wave. Go at it, wave 5. Have a party, but I still think we still have more. So in other words, 1, 2, 3, 4, 5 could be, or it's just 1, 2, 3, 4, 5, 3, 4, and a 5. One way or the other. What would give the tell here is that it's only a third wave. So we're just in a form, we still have a 5, and the 5 is what can come down here now, right? We're working through it. This is where the 5 may come. Or here we have for minuet wave 2, we've got that support at 19,786, we'll call it. But in that area, in the hood, plus or minus. And then that also could complete wave 5. So 1, 2, 3, 4, we still get a 5. And then a full blowout, we have additional support down here. And then the 50% marker at 19,553. All of these windows remain a possibility for downside. And then what the result would be is a minuet third wave just kicking butt and just going, taking off and going. That's going to be the diff. Because what are we writing? What am I running side by side? I have to come back out. Take that back off, call this a wave A, take this back down, call this a wave B, and we're working our way lower, ugly as it may seem, and the reason is because of this. So this would still be 1, 2, but now I'm looking for wave 3 to also be, to fit in a diagonal, and so either this could be A, B, C, A, right? 1 of A, B of A. No, not B of A. This would be A of 1. This would be B of 1, and we're in a C wave, which, see, it doesn't even make sense. My apologies. I'm going to stop while I'm ahead. Sorry for that side of the conversation. So I do think it's an ABC, and it's going to end up there. Enough said. I'm going to be done. And coming in tomorrow, what do we have in terms of any economic data? On Tuesday, we have the NFIB optimism index and the U.S. trade deficit. Optimism index, 6 a.m. Eastern. Okay. And U.S. trade deficit comes out at 8:30 a.m. The rest of the morning and afternoon will be spent with Fed personnel, governors and presidents out speaking. Next update will be on Tuesday, October the 8th.